Good morning, traders. Happy Friday. It's the 14th of October. We are Signal Centre Talking Ball. I'm Joe, joined by Stephen Taff this morning. How you both doing, gents?
Very
Hey
well,
Joe,
thanks,
you
Joe.
good, good.
Yeah,
Excellent.
morning.
Good to hear. Okay, interesting turnaround in the markets yesterday. Propped in some calls that maybe the bottom is in the short term. We'll back that up in a moment when we look at some charts. But first of all, we'll go through the latest headlines and what happened over the last 24 hours. So we saw, first of all, the US core inflation number hit a 40-year high. The US consumer prices increased 0.4% for September, which was above the consensus forecast of 0.2%, with a year-on-year rate declining only slightly to 8.2% from 8.3%. So this was initially met with some fierce selling really across the board on a number of assets, but then sharply reversed. A big move in equities. US equity futures dipped sharply after the US inflation number, with the S&P 500 index close to 2.5% lower in an immediate reaction. There was, however, a sharp reversal after the Wall Street Open, with strong buying triggering a wave of stop loss buying, and the S&P index then closed over 2.5% higher. Fed expectations have jumped again. There was inevitably sharp selling in treasuries after the consumer price data, with the 10-year yields peaking at near 4.04%. The market moved to price in a 100% chance of the Fed hiking rates by a further 75 basis points in November. Pretty intense speculation this morning in the UK that there will be a U-turn. Just after the US Open yesterday, there were media reports that the government was preparing to make a further U-turn and abandon some further elements of the controversial tax package. In response, there was a strong rally in gilts and sterling. Chancellor Kwarteng denied any change, but political pressure was seen as unstoppable as sterling rallied further. We've also seen European currencies rally. The dollar posted sharp gains after the US data, but the strong rally in equities recovered, and the UK asset prices triggered a sharp reversal in markets, and European currencies rallied strongly on short covering. The dollar-yen pair also retreated from its 32-year highs above 147.50 after the Bank of Japan intervention, but this was not confirmed. Further high volatility expected today. The UK government response is likely to trigger further volatility on Friday, with central bank actions and rhetoric also watched closely as the IMF meeting continues. There will also be the risk of sharp gaps at Monday's Asian Open following weekend events. So loads of volatility going on in the markets at the moment. So let's get stuck into some charts, shall we? Taff, do you want to kick us off with commodities and
Yes,
Bitcoin?
sure thing.
Oh,
Oh, okay. Maybe he doesn't. Let's have a look
he,
at
he
FX then.
obviously went, like, let me share my screen and just click leave studio.
Okay. Well, let's wait for him to come back. And in the meantime, let's look at some FX, shall we?
Yeah.
Let's start off with the dollar index then. So as we noted, there was a sharp move to the upside initially on the number from the US on inflation, and then that reversed sharply to post a bearish outside day candle. Price is pretty flat as things stand at the moment, so there's been no follow through following that reversal in price yesterday. As you can see, the trend still remains very bullish, and no immediate signs of that coming to an end. If we do start to see this round off back towards this previous support that we posted on the 5th of October, then maybe we could suggest that there is a short-term double top forming. But I think really to confirm that, we would need to see a break of this bullish trend. So maybe a move below 109.29 would be required for us to reverse course on this in the short to medium term. In terms of what's going on with Euro US dollar, big reversal there yesterday. Bullish outside candle formed, still trading within this bearish channel, so therefore still needs to do a fair amount more before we can get too excited about a reversal over the medium term with this. So for me, these highs that we posted on the 4th of October, which come in around parity at 99.99, was the high price. Unless we can get back above that, then I think we are still destined to trade within this bearish channel. Looking at cable, big move to the upside on this yesterday, but again, still got this big downtrend that's in place. We need to overcome these levels from the 4th and 5th of October at 114.95 before we can get too excited about this rally sticking. But plenty of volatility in this market at the moment. but overall the trend does still remain bearish. Just looking at some of the riskier currencies, so we can look at Aussie versus the US dollar. So this is obviously heavily linked to commodity prices, and typically when you get a risk rally, this is the kind of asset that would move quite dramatically to the upside. So we can see a really strong reversal on this yesterday, posting this bullish hammer candle, making new lows on the session, but then closing up on the day. And we are seeing some follow through with this as it stands up by 0.53% so far today. If we take a look at New Zealand dollar versus the US dollar, similar kind of situation. We were chopping around these lows. We made a new low yesterday before reversing to close up on the session, and again seeing some follow through here. So potential for some of these riskier FX currencies to maybe have a bit of a relief rally or a correction to the upside. So it looks quite interesting from that perspective, I would say. If there are any other currencies that people want us to take a look at, please let us know. Dollar yen, yeah, I mean, that's obviously still stubbornly high despite rumours of further intervention from the Bank of Japan. So that remains very close to, what was it, 24-year highs we said on it? Sorry, 32-year highs.
Yeah, I was going to say more than 30.
More, 32-year highs. Yeah, stubbornly sticking around that level. So continued weakness in the Japanese yen. Aussie yen was looking quite interesting as well. Fell just shy of a support at 90.52 before reversing sharply yesterday and pushing higher again. We did see a break of trend on this not so long ago. So maybe just a correction higher in the short term could play out here. That will do, I think, on the currencies, unless so there's any
short and
requests.
sharp and sweet. Thanks.
Yeah.
Taft's going to stay now. He's sort of like left the studio.
Chickened out.
Yeah.
Chickened out, but he's back.
All right. So I'm gonna start off with Bitcoin.
You need to share your screen, buddy. There it goes.
Yeah, there you go. All right. So I'm gonna start off with Bitcoin. I'll start off on the daily. Just take a look at what happened yesterday. With a lot of volatility yesterday, and as we mentioned before, Bitcoin is now trading more like a risk asset. So if you look at it, more or less mimics what happens with the US indices. Yesterday, look at this candle here. It just went all the way down, took out all the stops all the way down to this level that I had marked here, this 18,154, and then went up again to form this bullish hammer looking kind of candle. So we initially we had broken this support, this trend line support here, and we look to be breaking it again to potentially target the 2485 level. Let's look at what that looks like on an intraday basis. So on an intraday basis, this is what happened. Price came down, broke this trend line that I talked about, went down, took liquidity right on point on the level that I'd mentioned before, this 18,154, right on point here. Took liquidity there, and then we had a bullish momentum come up. We took out this was support. I think now it became resistance. We took it out, retested it on this small little candle here, and then took out this trend line again, and then we seem to be retesting it. So what I postulate probably happen today is price is going to come here, this first support here. If this support holds, then we're looking to probably target our first resistance here at 2485. This is the ultimate target. If this support gives in, then we're looking to come to the yellow zone here, get some more liquidity, and then ultimately go up. So my bias is bullish on Bitcoin. I'm looking to buy dips, or preferably probably a breakout of this high here and possibly target the first resistance here. I don't see price playing above this zone here, and I don't see price coming down here again because of the momentum that we had with the liquidity that we took there. So that's on Bitcoin. Let's go to the commodities now. This was my gun to the head trade on the natural gas. Again, because the dollar, I think the dollar dipped yesterday. So we had nat gas here. I talked about this strong trend line support here that's stretching all the way from January this year. It was tested, and then we're seeing this bullish engulfing candle that we had yesterday. This just shows that the bulls are in, and the bulls are willing to defend this level here. and we could possibly take it up to that purple zone, this zone here that I talked about. Let's see what that looks like on the intraday level. So on an intraday level, this was my gun to the head trade. I talked about this inverse bullish head and shoulders, complex head and shoulders because of the multiple shoulders and multiple heads. And I talked about how price would, when I put my gun to the head, I said, look, I'm going to put my stop just below the trend line, and price might possibly come down, but I don't see it closing below. And that's exactly what happened. Price came down, took a bit of liquidity, and then we saw that bullish move up higher. I also mentioned this weak. I said this is a weak resistance that's in between, and you can see that price right now is there's a bit of indecision at that level, at that zone. So really these levels are really like these are the areas that you really want to look at, maybe taking some off, getting in on a trade, or getting out on a trade, or putting a stop loss. So we're seeing price a lot of indecision here. We could possibly price could possibly just momentum could pick up again, and we could see price coming all the way up to this resistance zone here that I mapped out. That's 7.162 and 7.287. This is the ultimate target for me. Or price could come down again, take a bit more liquidity, and then go up. My bias is for natural gas to continue with the bullish momentum that we started yesterday. So any dips that come here, I would buy and target that resistance zone there. All right, that's on natural gas. Let's see what happened with gold. Gold is an interesting one. Gold is an interesting one. Let's just try and look at what happened yesterday. So we had this candle here again, just like the other commodities. It dipped down, took liquidity from this level here, and then went all the way up. But if you look closely at this chart, I want us to just look at this zone that I mapped out here. Let's see what it looks like on an intraday level. If we look closely here, there's this zone here that you can see that price on Tuesday, it broke it, but just couldn't really maintain above there, and then it came down again, and then we were stemmed to the downside by this level here, and then we tested it again, we came down, we broke it again, and then we came down. So there's this first resistance here. This is the place that you should really watch out for, and then there's this support here. So price is really more or less in this area here. So what could potentially happen is, if we break out of this on retest and then there's rejection, then we're looking to target the second resistance, which is your 1694, and then possibly come up all the way to 1710 or 1711, which is the upper boundary of the channel. This is for the bullish side. For the bearish side, then we need to break this first support here, come back, retest it, and then on rejection, then we're looking to target the second support, which is 1640, 1641, and then ultimately this zone here, which is 1615 and 1621. So pretty much, I think what happens would depend on what happens with the dollar today. The dollar had a bit of drawdown yesterday, retracement. So if that momentum, that bearish momentum on the dollar continues, then probably we're going to break this. Zone here and then go all the way up. But if the bulls come back on the dollar, then we're breaking this first support and we're going all the way down. That's on gold. Let's go to oil. Oil is an interesting one because of the back and forth that's happening with the Saudis and the White House. So the Saudis released a statement, I think yesterday, essentially saying that the OPEC meeting that they had, that the White House had asked them to push that further up by a month. And so the Saudis were essentially saying, look, this is what the White House said. And then the White House National Economic Director, I think it's called Brian Dacey, he came out on Bloomberg yesterday, and then he was asked categorically, did you ask the Saudis to postpone the meeting? And he kind of skirted around and everything. But anyway, what we're seeing is dynamics of the US playing against probably the Saudis and OPEC. And like I said yesterday, look, you don't want to fight OPEC, because OPEC is like the Fed. They own the commodities, so they can really cut down supply and really take it up. The US might put in those strategic oil reserves, but then I don't think it's enough to really affect the price that much. So my long-term view on oil, like I said, is bullish. So we saw this bullish candle yesterday that price dipped down, I talked about this 50% retracement. This is the place where I really wanted to take my longs, but it didn't really quite get there. Let's see what this looks like on an intraday. I wanted to take my longs on the 50%, but funny enough, I think on my other price feed, it really went straight down and then it just touched that level and then came up again. So what we're seeing today is we've got this resistance here, just like on gold. We have this resistance here where price is, and then we've got this first support here. So pretty much, I'm looking for that bullish momentum that we had yesterday to probably continue. But for that to happen, we need to have a good impetus to break this resistance here, this 89, 44, 89, 95 zone. If we break this on good momentum, if you're a breakout trader, then that could be your trade. Your stop you could hide your stop right down here and then target the second resistance, which is 93.46. Alternatively, price could come down to this weak support that I put here. It's weak support 87.91 thereabouts. Get some liquidity and then go all the way up to break this zone. That's another alternative view. But in terms of the bears, really, I'm not looking to take a short up until we break this first support here, this 86.85. Why? Because we saw a lot of momentum with this candle here. If you look at it on the daily, really, it's a wick, and then it showed that the bulls really are there and they're trying to defend this. So I wouldn't take a short up until we have convincingly broken this first support, tested it, and then probably on rejection, I'd probably take the short and then take some off on my second support, which is 94, 84, 91, and then probably target ultimately this third support here, 83.21. But my bias really is for that bullish momentum that we had to continue, and that's on the backdrop of the dollar continuing its retracement. Over to you, Joe.
Nicely done,
Nice.
Taff.
Yeah, nice
Like
one,
the
Taff.
macro overview on oil in there as well. Really,
It's
really useful stuff.
It's quite interesting, man. It's very interesting.
Definitely.
Yeah, I love it. I love it. Don't take on OPEC.
OPEC, yeah, the
Yeah,
oil
you can't fight, you can't, because they have the resources. I mean, how much oil does the US have compared to OPEC, really? So you can't. It's like fighting the Fed, really.
Yeah, absolutely.
Yeah.
Okay, Steve, over to you for a look at the indices. Big question here is whether or not the bottom's in a few of these. So,
You know what?
think?
Yeah, I mean, yesterday's reversal was pretty intense, and once it got going, there was a lot of momentum to the upside, which naturally happens after the bearishness that we see. And
Do you want to share your
the only,
screen?
yeah, not yet.
Sorry.
The only thing that I was building up to it, the only thing that really sort of concerns me is it's Friday, and we're going into a weekend, so that is my one concern. We have like a couple of days with the markets, you can't trade them, they're not active, and then we wake up Sunday night, Monday morning with a big headache if things do turn around. However, let's start with the Dow Jones, the US 30. And this is a weekly chart, so this is over since the lows of the pandemic, March 20, up to the highs, the euphoria of Jan 22, and then we've seen this correction lower. So we are in a bit of a bearish channel lower. Let's just draw it on here now. Quite nice, and sort of like a classic reversal channel. And it's just, we saw this sort of type of price action that we've seen over the last couple of days. We saw it back in June, where we got a very aggressive sell-off down to around about the 38.2% Fibonacci retracement level, and also a pretty decent swing low support level that we had from previous price action. And then we got a really lovely bullish engulfing candle, which stalled everything, and then we proceeded to sort of like rally higher until we got to the evening doji star formation, and then we've come lower now. Now, the interesting thing about the last couple of weeks prior to this week was these inverted hammers, and they're a sign of maybe a bottom being put in, or prices stalling to the downside, especially last week's, where you saw the market open where we closed the previous week. It made a new low. It's still around excuse me, it's still around this channel level, and and then it rallied higher but failed to sort of hold onto those gains. This week we've dipped lower, retested that support, and we projected higher, and it looks like we're heading towards a really nice positive reversal formation on the Dow Jones. As I say, it's Friday. We've got a few hours to go before the end of the week. Yeah, then we got the weekend, so that would be a concern for me, just holding any longs over the weekend with all the volatility that's going on. So on a daily basis, really the level that the bulls want to try and push above is 30,460, and we can see that we're already off to a good start. We've hit a new high, the highest we've seen in 5 days, and we've sort of like recaptured all the gains from last Thursday and Friday's losses. Almost got up there, not quite, but looks quite promising for the rest of the day. Nasdaq, similar sort of price action, obviously, although there was a quite key level on the longer term chart. Joe pointed out to me before the show, I think I mentioned it earlier in the week. It's a level of 61.8% fib retracement. Also, there was a swing low that we highlighted on the chart at 10,684. We managed to break there and managed to actually just like penetrate the 10,507 level. Got down to 10,432, so a nice 80 points below it, and then rallied back really quickly. So you can sort of see over the week we formed a really nice bullish hammer, and that again, could that be potentially a solid low that we've actually put in now? We could actually redraw this channel and maybe sort of like get a little bit more sense out of it. It still doesn't sort of like take this this low into the equation, but there's horizontal support, which is like a price that in. So that looks pretty decent from a Nasdaq perspective. The 4-hour candle that we saw from 2 o'clock yesterday was a bullish outside candle. That is really positive, and we've also taken out, when we're trading above, we just dipped back below it just now, 11,080. For me, that's key. We've closed above it from the previous 4-hour candle. If we can sort of manage to get back above there, it does open up the upside. We'll have a little bit of a vacuum between that sort of like high and the sort of swing low we got back on the 5th of October, so 11,307. So a few hundred points to the upside there. S&Ps, again, the 4-hour bullish outside candle. However, we have posted a bearish engulfing in the last 4 hours. So that has stalled, although that on a percentage basis probably did a bit better than the Nasdaq. We broke above the resistance at 36.55 and have projected nicely above there. Maybe a pullback to 36.55 may present a buying opportunity. Yeah, next real target or level is around about 3,800 area. So still a long way off. Taking a look at what we did in DAX, this was my gun to head trade yesterday, and I got absolutely slapped on it. Felt good for a while, but unfortunately for me, it reversed and stopped me out. But we saw momentum stalling a little bit. We had this level 12,120, which a break of there and a close below there would have opened up the downside. However, it spiked below it, got down to 12,000. Now you can't get a more psychological number than that in the current DAX German 40 climate. So that's put an end to the bears' ideas of pushing this down to the 11,810 area. And the rally back was really aggressive and was consistent and carried on up until the last few hours. We can see on the 4-hour candle, we're forming a bearish evening star formation. So that could be pretty interesting if we do get a close around about where price action is now. That would be at 11 o'clock. So we've still got quite a few hours, a couple of hours to go to that, 2.5 hours to go. So that anything could happen in that 2.5 hours. Going into the morning session, we may get a little bit of follow through buying from yesterday. So yeah, watch out for that. I suppose we're trading around the really key level around about the 12,500. And yeah, potentially looking for really an opportunity to go with this short-term trend. But again, I'd only sort of like target at the end of the day rather than holding anything over the weekend. Far too volatile for me. FTSE stalled and has reversed, and that's forming a shooting star candle on the 4-hour chart. That expires at 10 o'clock on this chart. So again, nice bullish outside or bullish engulfing candle. This one, not an outside candle, and that's pushed. We've sort of limped higher after that euphoria, taken out the resistance at 69.26, but stalled at 69.58 and reversed sharply lower, trading at 69.20 at the moment. So yeah, that's about it on the indices side. Is there anything else you want me to cover on that, or is that it?
Really on the FTSE, Steve, I think that's been a really key level around 6822.
Yeah.
I don't know if you can bring up the daily chart and just bring that into view. Yeah, you can see a load of lows going back to sort of May last year. It had a look below it yesterday, and I was sort of posting updates to the guys that we do a bit with in the stockbroking world, and yeah, it looked like it was dead and buried at that point, but it came roaring back and still managed to hold on to that 68.22 level.
Yeah, I mean, we've sort of like highlighted a few times in the past, and now we've sort of like posted another low coming in at 67.06. Like you say, it's like 100 points, over 100 points through it. You sort of think, yeah, this is it. This is really happening now. Panic stations, hit the panic button, and then, you know, one little flip of a coin, and it's all the way back up, and it looks quite positive now. So,
yeah, it does.
Very positive.
yeah, I mean, if you're looking at setting longs on a more medium term basis, maybe that's where your stop should be, around about 6700. And yeah, plenty of opportunity on the upside, as we all know.
Yeah, sure. Okay, thank you very much, Steve. So let's move on then to the gun to the head trade. So this is the bit of fun of the video where we pick live trade ideas on the stream in the hope that they play out between now and 9 o'clock this evening, or when the stops and the targets hit. All the trades that we post have stops and targets. They all have risk reward ratios in excess of 2 to 1. And it is just a bit of fun. You know, we are coming up with these trade ideas on the fly. So if you are interested in following them, do bear that in mind. You can check them all out on our TradingView profile at signal_center, where you'll see that we've posted them yesterday. So Taff's idea isn't on here. He was the only one that had a winner yesterday. He was up just over half an hour on natural gas. So well done to you. Yeah. And on the German trade idea that Steve did, obviously wild volatility indices yesterday, didn't really stand a chance amid all of that volatility that we saw in there, so that was stopped out. I was fading New Zealand dollar, Canadian dollar, stopped far too tight, and got a whack as a result of that. So yeah, Taff the only one with anything good that came out of yesterday, so well done to you. Time for some new trade ideas today. I have one ready if you guys are all right with me doing that.
Yeah, sure.
Okay,
Depends
so
what it
looking
is.
at sterling New Zealand dollar today. So this is the daily chart. As you can see, price was contained within quite a well-structured range for a period of time. We obviously saw this big move to the downside, which was created as a result of the mini budget in the UK. Then we saw it roaring back, broke through this major resistance level and pushed to the upside. So for me, the bias remains on the upside. We've seen a nice pullback into newly formed support before a continuation higher. Looking at the intraday chart, so this is the hourly chart, we've seen a nice push to the upside yesterday with all the risk assets taking a move higher. In the last few hours, we've seen a really interesting pullback to this previous swing high here from the 11th of October, which also is a 50% fib level, bang on at 99.22 from this low here on the 12th of October to the high that we posted on the 13th. So it's had a nice pullback to that level, held it so far. I'm going to buy it at 99.35 with a stop loss at 98.49, targeting a move back up to these swing highs at 20266. So that's ready to go. Just need to adjust my entry slightly. What's the new entry? 36. So yeah, that's my idea being published right away. If anybody wants to check that out, feel free to do so. Who's next?
All right, I'll go.
Yeah.
Yep, I've got one here. All right, so okay, let me just remove this label. So I'm going to short gold. I talked about this resistance here. And price seems to be respecting that, and we've got a bit of momentum going to the downside. So I'm going to short it. Initially, I wanted to target this support level here, but then the risk reward would not be that good. So I'm just putting it further down here. So my trade will be I'm buying at market. I'm selling at market at 1663.96, and then my profit level is 1633.05, and my stop would be slightly above that resistance at 1677.06, and my risk to reward ratio is 2.36. So let's see how that plays out.
Nice one.
Best of luck, mate. Steve,
Cheers.
over to you.
Yeah, well, I'm sort of like a bit, you know, I'm a bear, so I can't sort of do indices today. I'm
People
a
in
big bad
Sieges know
bear.
you are.
They certainly do. Hello, everyone in Sieges. I almost feel a little bit like I'm blushing there. Now, crude oil, I've been looking at crude oil, and I showed this formation, this head and shoulders formation, which I've talked about and probably bored a lot of people about over the sort of like last couple of weeks. However, sort of like managed to do okay on this short trade idea earlier in the week. Now, watched Taft's analysis this morning, and that's the only real thing that's inspired me on the gun to head trade idea. As we say, it's a little bit of fun. I'm normally a bear. I like to sell things. However, I'm going against my normal bias, and I'm going to look to buy this. Really sort of like thinking about, oh, get rid of that for a second. I can't get rid of it now. Right, let me get rid of it. This real reversal on the weekly chart is a morning doji star formation, and that's pretty decent. And we've had that sitting in the charts for a week or so now. Really sort of like, for me, I was looking for a little bit of confirmation with this candle. We did get a bit of a retracement back, and then we've started to rally again into the end of the week. On the daily chart, we've got a bullish outside candle, which I really like, and generally the sort of like the oil, I know it hasn't done it a few times, but generally you do get a little bit of momentum when you get a candle like that in oil. So I'm going for that sort of momentum trade today to filter through, and it looks pretty decent on the 4-hour chart as well. Looks like we've put a bit of a bottom in place. Really need to sort of, yeah, maybe I prefer to buy a break higher, maybe $89, but we haven't got that luxury on the gun to head trade idea. So I'm going to go into this, and I'm going to set my long at current levels. And the good thing about this, I can have a pretty decent or pretty tight stop. Let me see if I've got any sort of fibs I can target on the upside, because I can have maybe a 75 tick stop is decent. Maybe a sort of I'm looking for maybe a 2.5 to 1 risk reward on this. Let me just drag it up there, as I can't actually work it out in my head. That's close enough. Oh no, can't actually get it. But anyway, 2.49 to 1 risk reward. I'm going to target a move back higher, and going to get long here, 88.06. The stop is going to be at 87.31. The target is going to be 89.93. 2.49 to 1 risk reward.
Are you purposely leaving that winning trade on there just so you
Yeah.
can try and
Yes.
Inspiration.
Yes,
Yeah.
I am. Yes, I am.
Good.
Yeah.
Like it.
Unashamedly, yes.
Cool. You nailed it as well. Bang on the target level.
Well, if this comes in, I'll just obviously this will be my profile picture.
Yeah, fair enough.
2 winning trades.
Okay.
Yeah.
Thanks for that, Steve. Right, so day ahead. In terms of what's on the economic calendar, we've got US retail sales at 1:30 UK time, and then at 3 o'clock UK time, we've got the US University of Michigan Consumer Confidence number. Obviously, we've got many other things going on. We've got the meeting from the IMF ongoing. We've got the potential U-turn coming today from the UK government. So plenty going on and likely to create more volatility. Next week, we've got inflation in the UK on the 19th, and we've got the Australian employment report on the 20th. So that is pretty much that for today. Next week it will be just you two because I'll be traveling.
What?
I will try and
Oh.
get on the stream if I can, but I'm not sure how it will work at this moment in time. So hope everybody has a lovely weekend and has a successful day today in the markets, and we'll catch you all next week.
Cheers, Joe. Have a good trip next week. And
Cheers.
yeah,
Cheers, buddy.
be careful out there.
Will do. All right, see you guys.
All right, cheers.